Very excited to talk to Jordan Webster today. Jordan is a globetrotter. He's a contrarian investor. He likes the deep value plays. He has a Substack. Super excited just to pick his brain and see where his brain is at currently on various sectors. So welcome, Jordan.
Thanks very much for having me on.
Absolutely, man. Just wanted to reach out. Like, you have an interesting story living in Argentina. You have a geology background. So, like, you kind of understand mining and how to read some of these reports and what different areas have value. So really excited to have you on about that. So what areas excite you currently?
Yeah, so at the moment, I've been invested in these areas for a while now, and it's mainly uranium sector and oil and gas and coal. And I've always got a portion of my portfolio allocated to junior explorer side of things. So I've always got a portion attributed back to my geology background where I can sort of dig into a junior company and just see what exploration results they're reporting to the market. And if it looks good going forward. So yeah, at the moment, that's a rare earth play in Western Australia, in the Gascoyne region. And yeah, that's basically my portfolio set up at the moment.
So you have uranium, oil and gas, coal, and then some small rare earth plays.
Exactly. Yeah. Yeah. It's pretty
Okay.
concentrated, but it's how I'm running things at the moment. Yeah.
Yeah, so all in natural resources, essentially commodities.
Exactly.
What should an investor look at? Like how could you read a geological report? I mean, what stands out to you as a positive when you're like looking at one of these mining stocks?
If you're going to dig into exploration results from a company, you need to look at what they're reporting from their drilling. So you have to be able to look at a cross section, a geological cross section, which will always be reported with exploration results. And you just have to take into account on that cross section the spacing between holes, the thickness of the intervals, and what they're reporting. Does that make sense? So can you sort of get a rough picture in your head of what that deposit looks like? And a lot of people can basically read an exploration report, but it's this fine details of actually looking into the cross sections and the numbers, and then working out if they have got potential there to expand what they're reporting and what their plan is moving forward in terms of further exploration.
Okay, so this is where it gets really interesting because it seems like in the uranium sector, we have the producers doing really well, insanely well. But then the explorers, it seems like there's still some deep value. So it's kind of hard because you hear about these companies that are about to do huge like exploration, big drilling, and it's like I don't know if that's good or bad, like do you look
Yeah.
at like yeah, is it the proximity to another big kind of find good or any other indicators that kind of excite you?
In terms of uranium, I'm mostly concentrated in the developers, so the near-term developers.
Okay.
I've kind of steered away from explorers. I've got one I hold that could be considered an explorer, but mainly I'm looking at the near-term developers because that's where I think most value will come from as the sector improves and money moves into the sector. I think they're going to find the developers the most attractive. That's just my point of view. I've got the Explorer I'm considering as a call option to the actual uranium spot price rather than a value play.
Hmm.
So yeah, that's how I kind of look at my uranium holdings, more developer based than actually looking at drill results and explorers.
Oh, interesting. Okay. You think the developers could capitalize and actually earn some income from
Well, if it gets to that stage, yeah, I've held
yeah.
these developers for six years, I think now, and I topped them up in March 2020. So yeah, they've come a long way since then, but I'm not doing anything with that portfolio. I'm just sort of letting it tick away. I don't think the thesis is over by any means. I think it has a long way to go. I don't think it's in first gear anymore, but until I see basically utilities come into the market with influence, yeah, I'm happy to sit back and let this one play out for the next couple of years. It's looking really good at the moment.
Yeah. I mean, if you're in developers 6 years ago, that would have been an incredible time to own them. So you must be up a lot.
Yeah, well, it kind of gave me some confidence to quit my job and do something else and do some traveling and come to Latin America. And yeah, and just it sort of opened up a lot of location independence for me.
Finding financial independence through, of all things, uranium miners. Like this channel is all about uranium. A lot of it's about uranium, but still, it's such a obscure investment. So that's why it works. That's why it worked for you.
Yeah. Well, I was lucky to meet my mentor in the early days. So he introduced me to the thesis and the whole concept of cyclical investing. And to my untrained finance mind, it sounded really appealing and really easy to sort of get my head around. So yeah, thanks to that. That's Trader Ferg, who you've had on the show before. His Substack is just full of excellent content. So if anyone isn't subscribed to that, you should be, because there's some great information on there for cyclical investing and how to approach investing.
Agreed. So you are just looking to let uranium run now because you don't think it's over, which makes sense. I mean, until the supply gap is filled, it's not over, right?
No,
And that could
exactly.
be what is your understanding of that? It could be years before it's filled, or 1 to 2.
Yeah, I think it's just got a lot left to run. Like if you zoom out on the chart, the inflation adjusted chart, then and you look at where it is at now, it's $74 a pound or something. Then you look at the last cycle, and then you look at the cycle before that. Yeah, and the situation now and the setup is a lot better in terms of there's just no uranium out there, and yeah, there's a lot of contracting that needs to happen over the next couple of years. So I think we see some very nice price action in the spot price, and then uranium equities to follow in such a small sector, that I think any significant money that moves into it, you just see some explosive moves. And even the companies that have ordinary looking balance sheets just all move up together with the spot price. So that's what I'm hoping for.
It is exciting to say the least. So then you're not just in uranium though, so you're in oil. So oil is such an interesting one because you have the Saudis, you have Russia, you have US being a big producer or can be a big producer, the Strategic Petroleum Reserve, so many different variables. So what kind of excites you about oil?
Well, it's just the fact that you have 4 billion people in the developing world that need to emerge out of poverty. And there's really only one roadmap to do that. And that's what we've done in the developed world. And that's to have cheap energy availability from fossil fuels such as coal and oil. So yeah, if someone suggests renewable energy in this situation, then just point to an example where it's been adopted successfully. Even developed countries can't implement renewables effectively. So how do you expect those in the developing world to do so? That's basically the thesis I'm running with. And I'm thinking that the best value to find that is offshore, as I think a lot of the oil majors have to move offshore to explore for oil because they're just getting hindered through ESG on land. And I think it's all the investment for oil is going to move offshore, and I'm playing that through the offshore drillers mainly at the moment.
Okay, yeah, that one's so interesting because they're not really making money. They're not doing that well currently. They're kind of on like a PE ratio. They're kind of expensive a little bit just because they've had such a terrible history, right? Like,
Oh, it's been brutal, and yeah, it's
yeah.
kind of using it. The thesis of it that we're seeing day rates improve slightly. So if they stay on track to keep improving, then I think a lot of these offshore drillers are going to become quite profitable. And it's just so hard to build an offshore rig these days that I think those existing are just going to be worth a lot of money in the future, and you're going to see day rates improve. And it's not going to be as much of a cycle killer as before, as from new builds coming online. I don't think that's going to happen in the near term future. So I'm playing it as those existing and the modern fleets, such as those with Transocean, they're just going to be hopefully continue an upward trend. And then you combine it with some of the oil majors like Petrobras, who just sit on stacks of cash. They need to explore their pre-salt oil fields, and they're going to require deep water rigs for that. So I'm kind of coupling Transocean with Petrobras as a really good investment going forward.
Yeah, that makes a lot of sense. So there's like a scarcity of these offshore drillers. And so they're just going to be worth more and more over time. And no one is expecting oil to be a factor. I mean, which is crazy, right? Like the big governments, the big media, if you see how they talk to like the oil heads, they're like, what do you think is going to happen to fossil fuels? Like, do you really think it's going to be around in 5 years? Like they actually
Well,
asked that question.
exactly. And like offshore oil actually is fewer emissions per barrel. So a lot of these oil majors, they need to reduce their carbon footprint. And I think to do that, they're going to move out of sight, out of mind, and invest offshore. Otherwise, they're going to lose a lot of funding. Basically, they're going to have a lot of investors pull out through ESG going forward. So that's how I'm sort of playing thesis, and that's the thoughts in my mind.
Yeah, that is, I wasn't actually aware that it's less carbon offshore than onshore, but it makes sense. But also, I think Biden just approved the fewest amount of offshore leases in history because one of his campaign promises was like no offshore drilling. So, which is just going to make it scarcer and scarcer, which is good for the ones that exist.
Well, there's still plenty of other
Yeah.
areas that need to be explored for. Like I said, the pre-salt oil fields off Brazil. You've got West Africa.
Hmm.
Australia still has plenty of offshore drilling. So I
I
think
think,
it's just going to have to expand offshore, and in a big way is what I'm betting on.
yeah, no, it makes sense. And you're talking like, what's your time frame? Like 5, 10 years, something like that? Are you okay waiting that long?
Little bit shorter, hopefully. So I'm thinking in the next 3 to 4 years, we're going to see some really nice price action from the drillers there, and we're going to see a lot of money flow from the majors into offshore drilling and exploration.
Right. Okay, good. That makes sense. And then is coal, it seems like coal is the exact same thesis, right?
Yeah, I trade a lot of options on Peabody, or I have done over the last couple of years. I'm not currently holding much coal at all, any coal at the moment, but it's still just filters into the availability of cheap energy for developing nations, and it's going to hopefully it feeds into what I'm thinking for this northern hemisphere winter, which is a very cold winter there, and a lot of electricity demand from your powerhouses like Germany. And I think they're going to have to resort to burning coal again, and it's going to send the spot price up considerably. So some of those coal stocks might be looking good going into this northern hemisphere winter. Yeah, in terms of coal, just going back to where's the coal going to come from? I'm thinking they're going to likely want to result to burning the high quality coal rather than the cheap shitty coal that comes out of Indonesia and China. I just think there's plenty of value in the coal that comes out of the Newcastle. It comes out of Newcastle, so I think it's it's going to be worth a fortune going forward. Yeah,
Yeah.
it's an area sorry mate, just like it's an area I'm not super confident in, but yeah, it's just something I just have like a vague idea of what might happen, but yeah, I'm not going
Yeah.
to deep dive into it or anything.
Got it. So I think I understand kind of your philosophy, like the sectors that excite you. We have uranium, we have offshore, both extremely contrarian still. There might be a little more buzz around uranium these days, but we understand the supply demand fundamentals and they are what they are. So, is there anything else that you look at that's interesting that you might want to share with investors?
Um, I suppose the other where else I've got my money at the moment is a rare earth play in the Gascoyne of Western Australia. It's a very interesting one. This is highly speculative stuff, and I don't like talking about it too much, but I'll be transparent. So I've got my money in Kingfisher Mining. So basically, they have a whole heap of tenements around some deposits, rare earth deposits that are, I think they're almost in production, some of them, or they're moving towards production quite quickly. And they have some great looking ground geologically along strike from these deposits, and they're a micro cap. They're worth, I think, like 10 or 15 mil at the moment. So yeah, they're just basically going around doing some really great geology, bashing off rock chips, sending them to the lab, and coming back with crazy rare earth results. And then the trouble is with them, they've got so much good looking tenements that they have to do some really concentrated geology. So it's taking a lot of time. So they're doing a lot of geophysics, and then a lot of mapping, and really like 101 level exploration just to narrow in on targets. Otherwise, they can just torch capital by drilling in zones, and then they might not get good results from that drilling. So they're really concentrating, really pinpointing areas to drill, which I really like. And yeah, hopefully they have some good results coming out in the next couple of years. But yeah, it's just one of the plays I'm interested in based off my background as an exploration geologist in Australia.
Yeah, that's super exciting to hear that. So yeah, I think the market cap right now I'm looking, it's like $8 million, which is very exciting. And you're seeing
It's
actually good results. Like,
it's incredibly out of favor at the moment, the whole area. If you look at the other explorers in that area, it's just copying an absolute beating. I think it's more just market sentiments, just not there for them at the moment. But if you look at WA1, which is another rare earth discovery this year, that is just performing incredibly well. That's like talk of the town at the moment.
yeah.
They just keep coming back with incredible drill results. I'm not saying that Kingfisher are going to get onto anything like that, but as a geologist, I just like the look of their ground and their exploration strategy.
Interesting. So you're seeing kind of like in the drill results, not because they haven't hit anything confirmed big, but you just see kind of like traces of what would excite you as a geologist. Maybe if they hit something confirmed, the stock would be up a lot, right? Obviously.
Yeah, exactly. Trouble is, what they were hitting wasn't matching the rock chips they were getting from the surface. So the market expected to see something like 40% TREO in the drill results, and it just doesn't happen like that. If you're a geologist and you worked in Western Australia, you'll know that there's a huge upgrade element to anything that sits on the surface in terms of mineralization. So usually when you drill below something that is displaying incredible results like 40% TREO, you're not going to expect to hit anything like that in the drilling below it. It's a process of it's called supergene. It's a process of mineralization being upgraded through weathering, and that zone at the top where they've got the rock chips is a really concentrated zone, but that mineralization has to come from somewhere. So it will be coming from below, but it won't be to the extent of where those rock chips are coming from. So basically, I think they've got to explain those crazy numbers they are getting from the rock chips, and with all this extra geophysics and proper exploration they're doing, I'm hoping they'll do that shortly.
Are you comfortable with like their funding situation? Have you looked into that? Like in terms of, are they funded for at least a drill season or two?
Yeah, they're getting really low on
Oh,
funding, and
okay.
hopefully they have one more drill program in them before the end of the year.
Oh, wow.
But I think they will need to do a raise after that, and it doesn't really matter for me because it's not something I'm looking for quick gains in. I think they've just got really good looking tenement package there in ground, and hopefully they just keep ticking along nicely and work towards just basically exploring that good looking geological ground they've got. And yeah, if there's nothing there, there's nothing there. But as a geologist, yeah, it does look quite good for me.
Okay, that is awesome. And I appreciate that. Like high risk, high reward.
Yeah, exactly. That's why I don't like talking about it too much, because it's not like investing in these cyclical sectors that I have strong conviction in, and I think it's probably a much more safer bet to park your money. Yeah, this is just incredibly speculative stuff, and
Right.
yeah, nothing. I'd never put a large amount of money into something like this.
Yeah, exactly. I mean, if you're diversified, this is like a moonshot. Like we need some. I mean, I like having moonshots in my portfolio. So yeah, obviously not investment advice, but exciting and fun. And thank you for sharing that. So great. So anything else that you want to cover? And if not, then where could people go to stay on top of your Substack? And you could just tell us a little more about what you do there.
Yeah, sure. So I've got a Substack. It's called Yolo Trader. I started it a couple of months ago. It's just where I talk about quitting my job basically, and then traveling and trading options for income. And I talk a lot about Argentina life in there because I'm a huge fan of this place after moving here about a year ago. I really like it here, and I encourage people to come and check it out while it's so cheap and you can really arbitrage the currency. And yeah, and I put all my options trades and talk about my portfolio thoughts and have a chat once a month with my mentor, Trader Ferg. So if it does sound like something you're interested in, that's where you can find me.
Sounds very interesting to live in Argentina. Is it so you've had no issues? It's like beautiful and fun and safe and inexpensive.
Yeah, it is. If you're living in Argentina with dollars, you can live really well here. You can eat like $10 steaks every day. You can find cheap places to rent, and it is relatively safe compared to the rest of Latin America, from what I've experienced. Buenos Aires is where I am, and it's a great city. There's lots of stuff to do, good weather, and yeah, it just ticks a lot of boxes for someone in my situation.